The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
This is December the 17th, and Dow's down 118 to 17,630. S&P's down 16 at 2,056. You've got the comp index down 28 at 5,042. This is the opposite of yesterday. The gold index is down 25 at 1051. So much for the dollar having a pullback and helping the commodities, because silver is down 54 cents at 13.70. Platinum's down 26. High-grade copper is down back at the 204 level. Crude oil is down at 34.95. And we've got bonds up 21 30 seconds. And this is very interesting because bonds held beautifully yesterday. I spoke about that. That there's a chance that bonds might pull back a little bit and then hold. And we're going to talk about that in a moment, but let's do a couple of things. There are a couple of chart formations that I was looking at last night, and I'm going to talk about that right now. Let me just show you something. I'll go quickly to the diamonds just to show this pattern. You see this right here? You see that W formation? So let's go back to the ESH16. That's the March E-minis. And then I can just talk a little bit about that because that traded overnight. We need to see that because it went to a higher high. And now what we're looking at is that W formation with the arch in the middle is very important because it's essentially suggesting, and a lot's going to depend tomorrow on the weekly chart, a lot is suggesting, based on the 120-minute chart, which I said to my subscribers on my opening call, there's a good chance that we're making some kind of a top. We have to have a digestive session. This is a little bit more than a digestive session, so we're going to have to discuss that as well. What I did show immediately when I sent my charts over to subscribers and also to the den this morning, showed the 120-minute chart in the daily. I quickly sent over the 10-minute. Look at the No, this is the wrong one. Look what the 10-minute chart did. This is the March contract. This is when I sent it. Can't remember. So this is 7:30. It was at about just before 8 o'clock. We were right there. And I draw. Remember, this is where this happened afterwards from there. Okay. And what I was looking at is that we made another peak D after an instant restart in the 10-minute chart, and I didn't, this is with no MACD or stochastic, but after years and years, after hundreds of thousands, it's probably more than hundreds of thousands of charts that I've looked at the MACD and the stochastic, I kind of knew that that pattern right there, having made a top there, that there was a chance that we might see weakening in the technicals. And look what happened. You made your right shoulder failure. I'd already drawn all this in. And then what did we get? We got, I wonder if I've even got, no, I think I took it off. Oh, that's a shame. All right. And then what we got was a little bit of a bounce, and then a left side, right side, I'd drawn this in with that trend line to say that there's a chance that if we broke the support we were looking at, we could quickly go down by 10:50, 20 minutes ago. We should be taking out the left side low of 2059.50. Well, it went right through that in a shorter period of time. It went right to the next level of 2056.25 in an arch formation. It did that in an even quicker time, and it cascaded down. And if you think of this just as a 1, 2, 3, 4, 5 wave move to the downside, if we take this out, this, you remember I drew this line, this horizontal line, a long time ago. I drew it for all these chart patterns here. And I showed that there was a, what did I look at it? I looked at it as if it was a sine wave with this level right here, 2041, I think it was, 2044. Did I just move? Yeah, 2044 as being very important. And look what happened. We've spiraled to the upside, broke out, went to a peak E, landed up going ABCD, restart, ABCD, pull back, and where did we go to? We've tested this key support line. And that's really important. And what it says is that right here I've drawn in, this is with, remember, no technicals, just trend lines. Arches, market is made up of only 3 moves, arches and cups. And those arches could be V-shaped, up or down, and there's a straight line move. Straight line move, straight line move. And then something else happens. Remember the rule of alternation in Elliott wave? Well, in a sense, I don't want to get too involved with the Elliott wave here, other than to say, in my work, the dreaded H's could become larger H's, and that becomes a big test, because now you can have a pattern that says, have we made the low of the day? I'm suspecting we're close to the low of the day at 2043.25, but. And remember, this is that whole zigzag movement as soon as the Fed came out. So the challenge was the rectangle formation, which we powered through yesterday, came back into the rectangle formation. Long-legged dojis. Remember, I have a rule. Long-legged doji invariably means that at some point you're going to test the body of the candle as you come back into the rectangle that was made. We've just done that. So this is a very important period. Why? Because there's a possible trend line channel up. So that's one pattern rising, and then higher highs and higher lows, and then there's the arch formation, that H, lowercase h. So the challenge is which one is going to predominate. And my thinking here is that we're going to get a test of 2043.25 in the E-mini, the March E-mini, and if that's successful, and within 5, that's 50 minutes, 5 10-minute bars, if we are underneath 2043.25, that's very negative. We'll go down to the lower part of the rectangle. But if we manage to break to the upside and break this down channel that I've just drawn in, and that's very simple, it's 2051.50, a move above that in the next 3, it says 30 minutes. Those are 3 10-minute bars. That's going to be very important, because that suggests that we could try to get back to where we broke out, and that would be all the way up at 256. That's going to require a lot of work. Why? Because the VIX index, let me go to the VIX index right here. The VIX index, VIX.X, has had a very strong candle, having gone under the 200-period exponential moving average. So unless at 1857 it starts to pull back right there to 1785 or lower in the next 30 minutes, then we're looking at sort of a sideways consolidation. And then it puts into play what was the meaning of those powerful legs to the upside in the various indices yesterday. And the VIX index went peak A, B, C, D, all the way to the top at 2681, and has plummeted to the low today of 1613. That is huge. So we're looking at a very, very powerful moves to the upside and downside in the volatility index, and commensurate moves in the other indices. Now, what I'd said is we need to look at the dollar. The dollar right now is up at 98.92. 98, whoops. No, that's the H contract. Let me just check something. I haven't done anything. DX, okay, that's 16. Okay, it's the same pattern. So that's at 98.96 and 98.96. Wait a minute, we're all over the show. 98.96 for the DXH16. And I'm looking at the screen here, and it says 99.23. Well, I'm just, if you don't mind, I'm going with the actual index itself. Index is at 98.92, and at 98.92, it's up $1.03 in leg A. Very powerful move, but it is leg E in the 120-minute chart. So the next, on the day, it's going to be really important. Does the dollar retest the 98.52 200-period moving average? 98.73 is the 9-period moving average, just a little lower, and 98.52 is the 200-period exponential moving average. And I noticed something last night. Now, this is going to be quite important. In the continuous contract of the dollar, it did not make a new recovery high. The weekly chart did not make a new recovery high. This is still leg C. We've not made D. in the weekly. Now, I hate when I get these diverging indexes. It's like when the diamonds and the Dow don't correspond. Just throws things off kilter. They do eventually come back together, but this is a monthly chart. It means it has to go all the way. It has to break to a new high and go to 101.555. No, 101.556. That's a big deal. So, okay. Now, I wanted to show that just to say the dollar's having a pretty decent rally. And what's really important about this is that we've got to monitor to see whether the dollar can break into, I'm going to go to the DX if you don't mind, my usual, you got to use your usual contracts, otherwise you can get very confused. There's a trend line, and that trend line says that the dollar needs to break into the 99.50s. It's at 98.90. If we can get to the 99.50s, all of a sudden you've got yourself, it isn't a V-shaped pattern, but it's like a very deep cup pattern. And that says, hey, you cannot rule a double top out here. And that makes it a big deal because look what happened to the gold index. The gold tried to rally and it could not hold that, sustain that rally. And it's retesting the low of December the 3rd at 1045.40, and today's low has been 1046.80. We're real close to breaking that low. Wow, that just says commodities are going to continue to be hammered if this is the case. Let's look at crude oil. Look at this. Crude oil hasn't made a new low. Has the USO made a new low? Yes, it has. It's taken out that low. So this is very, very weak action. Very weak action. And as I was looking last night at the commodity indexes of the various commodities, my thinking was that if the Fed wanted inflation, they had every opportunity to start pushing yields higher and to be the stimulus for it, to be active rather than to be proactive rather than just active. The thinking here is that if they start to push rates higher, it would be a spur to weaken the dollar and maybe to move the commodities higher, if it's possible. I'm not sure. When I hear about inventory and I hear about all these stories and about these very negative stories about the commodities, my thinking here is that bear markets tend to go down until there's a major, major catalyst for a reversal. And I don't see any major catalyst. It couldn't just come from the dollar suddenly pulling back a little bit. So that's going to be very, very important as far as I'm concerned. However, there was a relationship with the stronger dollar and the stronger market. It wasn't a direct relationship that you could say stronger dollar, stronger market. It happened that they both went up at the same time. So now there's going to be a test, and the test is going to be very important for a number of reasons. One of the reasons why I'm opening call, I'm still leaning towards trying to find shorts, even though I'm looking at some longs for smaller positions on the longs, is that some of these issues are holding very well. I'm going to show you one in a moment, and we'll talk about them. We've got Marvin in Orlando. Marvin, we'll be back with you in a moment. Got a break coming up. Dow's down 161, S&P's down 22.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their Yield Pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I just wanted to mention, it was a couple of people mentioned this to me. I didn't see it. I didn't even expect it. The short-term trading index, that's Richard Arm's short-term trading index, hit 386. It's trading at 383 right now. Normally, it's trading in the 130 to 0.65 area. Whopping big move to the upside. Very unusual. That showed intense selling pressure at that particular moment. Now, what does it mean? In my work, it says that within 2 days, there should be a very sharp rally to the upside, but you don't know where it's going to come from. But it's a warning that at any point, if you start to see a rally, don't short until that rally has completed itself, because it could be 7 to 9 or even 10 to 11 S&P futures points, which should translate into move up in the index itself. All right, we're going to go to Marvin in Orlando, waiting patiently. Marvin, how are you?
Hi, how are you? Thanks for taking my call.
My pleasure.
So S&P in general, I mean, I think that we were in a downtrend anyways to begin with. I think the Fed just interrupted that downtrend. So we had a little pop. If you look at just a daily chart, it looks like even if you're going back to, July onwards, you're seeing lower highs being made in the market. And now you're seeing a little bit of a lower low that was created here,
We only went to a nominal new high at 56.9. Where am I? Oh, I'm looking at the SMHs because there's a question the Dan. Let me just go back to this. First, I'll put the SPY up, because did I clear that up? Give me 1 second. There we are. Just wanted to use the SPY. Correct. Lower lows, lower highs, and a balance with a now potentially lower high. I'm using the SPY, but I'm going to I want to see something here, because I think a lot of people look at the SPY because they're not always looking at the S&P, so I thought I'd grab that. Now, what I had already drawn a while back was the arch formation that goes into a lowercase m formation. And that said to me that even if there's a rally, that's going to... Let me just show you this. I hope, I don't know if you can see this right now. This is the Dow chart. This is what I spoke to Tom about. I think it was it yesterday? I believe it was. What is today? Thursday. It was on Tuesday. And what I was saying is that with all the noise, with all the fuss, with these incredible moves intraday, it's not often that almost every other day you're looking at moves in the S&P, most often going from a low of a -20 to a high of +20 in the futures, or +20 to a -20, just zigging and zagging all over the show. And yet I always have this image in my mind of a dog running into the water, coming out, and everybody's looking at this dog standing around, and then the dog puts its 4 feet deep into the ground and shakes and shakes and shakes, and everybody gets wet. And then the dog just calmly walks off and is wherever it was going. And that's kind of what we're looking at here. There's been this tremendous shaking. The water's flying all over the show, hurting the shorts, hurting the longs. And then all of a sudden you look at it and you say, wait a minute. And this is what I said here. All we've been in is a rectangle formation. I even drew it in as, let me just see if I can, yep, there it is. You can see it. I even made it gray. I'll move this, oops, I moved the wrong one. I'll move this away so that looking at the chart, you can see, there you go. Now you can see it without the rectangle. Now I'm putting the rectangle back. And all that's happened is that we've been within a trading band, and that trading band has said, okay, when you get to the low 17,000s, like 17,000, under 17,220, you can start looking at it as a buy. And when you start to get towards the 17,800s, up until now, that's been the number. You can start looking at 18,000, 17,800, maybe 900. You can look at it as a sell, and that's in the Dow. If I go to the S&P, it's a slightly different chart, not that much different, but it is different enough because, let me just move this out a little bit so that you can see it, because we made that deep correction down to 202.18 in the SPY on the 16th of November. But basically, if you look at this beautiful 200-period exponential moving average, I just showed it now, it's that orange line. We've just held that and held it. Now comes the big test. Do we break under 204.50 to start heading towards the recent lower low? And that's really what you're talking about. So the high was 211.66 on the S&P. That was on the 3rd of November. Pulls back to 202.18, runs up to 211 round number high. Oh, I forgot about that. I remember saying, oh, and then I forgot round number high. It's a lower high, but it's a round number. And then comes all the way back to the low that was made. Now, so you brought up a really good point, 199.95. And the point is what I always talk about. If you're making lower lows and lower highs, you're in a down phase, and if you're making higher highs and higher lows, you're in an up phase. So Marvin, can you hold on?
No, I gotta hang up.
Oh, you gotta hang. Okay. If you can listen afterwards, I'm going to discuss in a little bit more detail. Thanks for the call, and thanks for initiating that call. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman down 157, S&P down 22. Just trying to form some kind of a tradable bottom here. I want to go back to what we were talking about, and I apologize, Marvin. I just remembered as we were talking, I was actually talking, and I should have let you get your question out. That, in fact, you sometimes cannot hold on. So I hope you're able to listen to this maybe a little later on. But it's really important. You brought up a really good question, a statement. One that I always make, and that is, if you're making lower lows and lower highs, you've got to consider that at that moment you're looking at a down mode, and if you go looking at higher highs and higher highs, then you're looking at up mode. Right now, the diamonds have a different picture to the SPY, the S&P 500. So this is very important, and what I'm really looking at is that the key support at 200 on the 200-period moving average of 204.52. We've got to monitor that really closely, because if we decisively break under 204 between now and Monday, and I just should mention I won't be here tomorrow. I'll be traveling, so I won't be doing my show. I will try to get my newsletter. I've already started preparing it for tomorrow. I'll try to get it out if it's possible at all. So what we're looking at, if you start to make, in other words, you see this yellow circle, oval right there? That's a gap up. And that's a gap up island reversal. And that's really important to note. 204.14 was the high on the 11th. and 204.18 was the low on the 9th. So there's a little gap there. So if we start to fill that gap, not only is it really negative for the daily, but it impacts the weekly. And the weekly then takes that arch formation that I've drawn and it makes it into a more odious type of chart formation. So I would like, what would I like to see right now? I would like to see that you're looking at this pattern here in the Dow, which is a far more because it has dividend stocks in it that are doing really well. I'm looking at this and I'm saying we're stuck in this range. We've gone from the bottom to the top, to the bottom to the top, back to the bottom, and now we should be heading towards the top. That's just the way the pattern works. If it starts to fail and the Dow takes that 17,350 as support, it's at 17,590 right now, that's going to be something completely different. The MACD is improving, the stochastic's improving, so I suspect that somehow or other we will struggle towards the upper side of this trading range. Now let's get back to our story. So the SPY, make it real clear for Marvin. Marvin, if you're listening, under 204, a close under 204 says the pattern that you were talking about is correct. But I'm looking at the Dow being maybe a little bit more of a leader at this particular point and telling us that there's still enough residual strength to try to make more recovery highs. I don't know about going to all-time highs, but at least recovery highs. That's what I'm looking at. Where would I be impressed with the SPY? Not impressed with today's action. I would be very impressed if by Monday at this time, when I'm doing my show on Monday, I'm saying to you, S&P, the SPY right now is at 206.67. Why? Because I'd prefer to say the SPY at this time is at 207.10. Why? Because if it's into above the halfway marker of this candle that we're looking at right now, all of a sudden you've got quite a good bit of repair work done, and it's forming some kind of a base. That's number one. Number two is the spiral in the VIX. Not the VIX. The VIX is down. The spiral in the trend gauge. That is something must have happened. There must have been a huge trade merger. I don't know. Something happened, but it was an impact. It didn't really reflect what I would be expecting at a short-term trading index. I mean that is huge. That is huge. 394. Now it's at 394. 390. I mean, it's now at 363. It was at 394. That is amazing. Why? Because on the 4th of September, the spiral, that was one of those days where everyone got really nervous. It spiked up to 553. So I'm looking at this. I'm thinking it's an aberration. I'm thinking that we've made an internal low for the day. Let me just see. And I would not be surprised if we try at least to rally so the Dow closes down a lot less, maybe minus 56, S&P down 6.5, something like that. That to me, there you are. There's the S&P on its way to make that, going to that channel. Good. Okay. We'll be back with that. We want to go to Ben in Tallahassee. Ben, how are you?
Hi, Basil. Great. How are you?
I'm well, thank you.
Great. Two questions, if you have time. First one is, with all the oil, energy-related stocks in the S&P, I was really surprised yesterday when the oil plummeted. I think it was like 2 or 3%, and then the S&P ended up going higher. Just was curious your take on that. And then number two, what you see in the VIX on a weekly, and I don't know if you can get a monthly on that or not.
Oh, yeah, I've got everything. So let's do this. First of all, it was the dollar's impact. The dollar did not pull back. In fact, it started to run higher, number one. Number two is my thinking was, if there was ever an opportunity for crude oil, not crude oil, I said it was my least favorite, for the gold to start to move higher, it had to take any opportunity of dollar sliding under that 96 area support, because if it did that, that at least would say now it's got at least a modus operandi saying dollar pulling back, this is our opportunity to have a rally. Couldn't do it. Dollar now is even stronger. It's at 99.19. Oh, I was behind before. That's why. 99.19. and the futures up at 99.27. So this is really strong action with the dollar. And my reference point here is that for a long time, rallies in the dollar have been commensurate with not necessarily the percentage gains, but with the direction of the general market. And if there is a movement in the dollar now, and the stocks are able to correct themselves and close quite nicely on the day, I mean, down maybe, but way off the lows, that's going to say to me, we've got to keep that correlation in mind. Now, here's the other thing. Your question really has to do with, let me just do this right now. The VIX yesterday plummeted, continued the directional change from the 14th where it hit 2681. And that 2681 for where the market was really high. So we've seen a lot of put buying, and I'm suspecting, based on now I'm going to go to your question about the longer term. If tomorrow, and as I say, I won't be here tomorrow, but if tomorrow the VIX index closes under 18, right now it's at 1834. The 9-period moving average is at 1819. If the VIX closes yet again, like it has done previously with Spectacular Thursdays and Terrible Friday, if it closes underneath that 9-period exponential moving average, that's going to allow the market to at least have the liberty to move up without the selling pressure produced, in my reckoning, by a high VIX index. And now that the fund managers are saying, hey, wait a minute, we bought all these calls or whatever it is. We bought the VIX based on the fact that we thought there'd be much more hysteria to the downside. And even today, there could have been a misrepresentation yesterday. And the market really was saying, oh, no, you guys are crazy. I'm going down much more. And it still might by the end of the day. Watch the VIX. So I'm saying to you, underneath, let's call it 18. Under 18, Friday at 4 o'clock, and tomorrow is options expiration. That's suggesting that the volatility index is kind of out of the way for now. The selling pressure is out of the way, and that there'll probably be buying pressure with the market pushing higher. The biggest move might have been made, and now it's going to take more energy to go higher. But there are a couple of stocks that are acting really well within the Dow that could, in fact, help. And there are quite a number of stocks that are getting a little bit toppy. So this is a very important period. So those are the numbers to watch. Downside under 18. On the upside, I would say to you, a move in the volatility index above the daily 1925 level. If it's a close above that, a close anywhere in the 19s or higher, suggests to me that the move that we saw in the market over the last couple of days has been an aberration. It was too much optimism, and it was ill-conceived optimism, and that we are looking at much stronger upside caps. And then Marvin would be correct. We're going to be looking at the spine and even the Dow making lower lows and lower highs coming next week. So
that was the only reason. That was the reason for my comment on the oil plummeting, but that the market going up. I was a little concerned that it was just simply a short covering situation, and then we see reality today. But maybe that's just the wrong assessment.
I think you brought up a good point, because XOM would have been a little bit, not necessarily directly, but a little bit impacted, I think, if it was directly responding to crude oil's price, and it's holding very nicely at 78. It had a great move, and now it's just consolidating, and now we're going to see what happens. And the same thing with CVX, which is Chevron. And Chevron also is holding very nicely, down 95 cents after spiraling from the 84s up into the 93s. So I'm looking at this and I'm saying there are enough stocks that are telling me we've got to separate ourselves from the commodity aspect, and that's been hard for me to do over the last 2 days, because I've been expecting that the dollar, if the dollar did pull back, we would see gold move up. Gold hasn't. So I'm going to say to you, I'm going to make it as easy as possible, and I've been speaking about this for a while. I'm using the volatility index, and I'd say the volatility to subscribers, the volatility index and the dollar are probably way more important right now than bonds and gold. And I'm keeping my eye. The dollar's still acting very well. It's actually acting way better than I thought it would as of yesterday at this time. So I'm not going to exclude the fact that the dollar still is in command. Tom always calls it King Dollar. I think it is absolutely King Dollar. Look at that weekly chart as of this very moment. It's really looking very good. Monthly chart is looking very good. I will not fight that. I like what's going on in the dollar. So I'm just going to say to you, I'm sticking with my contention that volatility index is very important. Those are the numbers that I'd be watching. A close under 18, very positive for the market. A close in the 19s. I give it a little more room. Let's say a push into the 20 area says, hey, watch out. We're not done yet with this consolidating sideways move. And that's really what I'm looking at. And as for crude oil, I think that there are other things going on, even though it hasn't broken the low of 3 or 4 days ago. The USO has certainly done that. I just be real careful. I think crude oil is in a different league altogether. It's different, even though the trend is kind of the same, but it has a different digestive component here. Normally what I would say is that if this was a move to the upside, I'd say it needs a little bit of a breather. On the downside, it had a one-day breather, and now it's pulling back, and that says that the slide to the downside seems to be continuing, and that I consider that to be. I'm just going to add UNG here because I had a question about what the count is on UNG. It's just continuing. I don't know how to put it. Let me just do it real quickly. It's A, B, C, D, recycle A, B, C. It says G/C, and it looks like it wants to dip a little bit more before they can even try to stabilize. I think they're in the same category. So I'm answering your question by doing a number of different things.
Yeah. No, I appreciate it. That was good feedback.
And the other thing is that a spiral like that in the TRIN index usually doesn't. It's funny, the TRIN doesn't usually sustain moves like that, but there was a period just recently where it had 2 or 3 days of continuous high TRINs. That's very unusual, and over there.
I guess as it relates to oil, if you look at the absolute plummet over the last, 12 or 18 months, and the market has been either stable or has gone up. I guess that just proves to you that the overall S&P isn't really as attached to just oil itself as I was thinking.
That was a point I want you to bring up. Thank you for reminding me about it. You mentioned it, and I thought, I've got to talk about it. That's why I mentioned Exxon and Chevron. What I wanted to say is that we had seen for a long time that the weighting in the oil structure was so big in the S&P and even the other indices that when they broke down, it really did impact the S&P. I think that's a lot less at this particular point percentage-wise. So I'm not putting that same correlation to it at this particular time. But there is somewhat of a correlation. But I don't think it's anything as it used to be.
I agree. It just seems to be maybe now that it's down at such a lower trading rate range, maybe that in itself has created a much smaller impact on the overall.
And in the den, and we have such wonderful people in the den there who know so much. I just got a text saying it's only around 6 or 7% now. So that's a big difference. You remember there was a time where they were in the teens, and you really did see a relationship. So good question. I hope that helps a little bit.
Yeah, excellent. Thanks, Basil.
Thank you very much. So let me do this. Is that the... Oh, time is flying. I've only got one segment to go. Folks, this is a quick Thursday. I'll be back. Dow's now down 125. S&P's come back a bit. It's down 17. Let's have a look at this little chart here on the 10-minute that I'd shown before. Wrong one. ESH as we're going out. There it is. Yes, a nice little bounce off the lows. I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks, we're back. Just a couple of questions I had. I just want to see if I can get to them. I did that with the churn. Natural gas, I did. Okay, this is what I wanted to show. When I was going through a bunch of charts, look at this. What do you do when you get stocks like this? This is the stock, and I showed it this morning. I showed it right there. Adtran, an old favorite. Right? It used to be a great trading stock years ago, decades ago. Well, that, because it hit the 200-period moving average, I thought that's really good. And I said, we're going to be watching it because the weekly chart, that weekly chart was there. It wasn't there. It was stopped at 17. Look at the technicals. It was really improving. I did not expect. I didn't put it as a buy anything. I said, just look at the chart. Doing well. Many charts are like that. Weekly is improving. I'm looking at a number of the lower price stocks, not necessarily lower price, but the ones that names that you don't look at all the time. And they are, some of them, weekly charts are acting very, very well. So what do? Do you just grab and say, hey, I love this, and it's a weekly chart, I have to put a wider stop, and I'm getting it regardless of the market? Or you say, hey, market conditions, that's what I have to think through this weekend. There are a number of stocks like this, and I'm saying I wouldn't mind a little portfolio of a couple of these things, and at least if 2 out of 3 really work, that's very exciting. And look what happened. This thing gapped up 5.5% today. It gapped out. It's 98 cents. It hit, in fact, closed it yesterday at 16.88, and then today it hits 18.20. Who knew? Okay, so that was in the scan that I have. Now, I wanted to show that. Then the question on the SMHs, and what I'd said, let me just read it. This is Trader Town in the Den said SMHs, well, actually the SOX. So I'm looking at the SMHs, the semiconductor ETF. So I said if SMH breaks 54 support by Monday, it will be a short-term negative. At this point, the weekly is still technically strong. In the 55.20s by Monday, that would be good. Here's what I'm looking at. The weekly chart has gone to a peak C, pull back sharply, holding the 9-period moving average. MACD is still very good. Stochastics at 87%. The on-balance volume is rising. So I'm saying, at best, we might be looking at an oval pattern, but the monthly chart is going to be really important because the technicals in the monthly look like it's a right shoulder failure at peak B, gray peak B. Watch it closely. And yet I've got this middle thing, the weekly, saying, don't get too excited because it's going to, it looks like it's still holding very well. So that's the way I'd be looking at it. If you're short, then you're fine. All I would do is I'd just keep the stop you have, because that's if you think that it's going down. But I would say that any time in the next 2 days, Friday, Monday, if you start to see this rally strongly and then takes out today's high of 55.61, starts to go to the 55.80s, I would say you just be a little careful because there's still enough residual strength. But if the semiconductors break down, I'm going to take that as an important key, a metric in my whole smorgasbord of technicals, because I like the fact that it's rallying here, and some of the semiconductors have had a great move up. So I'm not going to be here tomorrow. There are a couple of other things I want to do. Probably I'm running out of time, so let me just make this real clear. The Dow is one of the stronger indices we're looking at. It's had quite a sharp pullback, 136 points down from the intraday high today, right at that trend line resistance. Remember, we drew this in ages ago, and we're looking at it. Bam, bam, bam. It can't break out. The Dow has to not just hit it, it has to close. I guess it doesn't have to close, but it has to break into the 17,830s. And I would say that it has to do it by Tuesday of next week at the latest without breaking yesterday's low of 17,483. So far, I kind of like what I'm seeing. The weekly chart is still very nice technically. So that I'm just throwing that out. And now I want to make it as we wrap up, and you're going to go to Daryl for another great show with Daryl. The VIX index, a close. It's at 1829. I close below 18, especially tomorrow, would suggest there's still buying pressure. A push above 1930 says selling pressure is extra. Have a great day, and I'll see you on Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.